Let's also tell you that the Central Bank of Nigeria has changed its stance on crypto assets in the country and asks banks to disregard its earlier ban on crypto transactions, essentially noting that current trends globally have shown the need for crypto regulations. This is according to a CBN circular signed by the bank's director, Financial Policy and Regulation Department, Haruna Mustafa. Although the CBN emphasized that Nigerian banks and financial institutions are still prohibited from holding, trading, or transacting in crypto assets from their account, the new guidelines will allow virtual asset service providers, which include cryptocurrencies and crypto assets organizations, to now open accounts with Nigerian banks. And to talk about this, I've been joined live on the news by Sheon Dania, founder, trade father. He joins me now on the news. Good afternoon. Glad to have you join me.
Afternoon. It's a pleasure to be here.
All right. What do you make of the CBN's new stance on cryptocurrency and other virtual assets?
It's very exciting times, right? But yeah, so the CBN stance, it's while being very cautious. It's an evolving and welcoming approach, to addressing the issues of the field of the industry of cryptocurrencies and virtual assets generally. So by them maintaining strict restrictions on the banks and financial institutions from dealing directly in cryptocurrencies, and they are also acknowledging the existence of virtual asset service providers. So CBN is trying to strike a balance between, these transactions, right? And then they suggest, that there's a recognition of the growing relevance of virtual assets in the global financial ecosystem, and they're also prioritizing regulatory control and, maintaining the sovereignty of the country and financial stability. So I think it's a welcome approach, to welcome development. The guidelines clearly states, that the virtual asset service provider should refer to the SEC regulatory framework that was developed in 2022. But I believe it's a welcome development for us as practitioners in the industry. We know it's time for engagement. We clearly understand that the government means business, and it's time to engage more and see how we can harness the benefits of the cryptocurrency and digital assets industry for the good of Nigeria and Nigerian people.
Hmm. But help us understand this better, what the Apex Bank really means. Are they saying that why people may not be able to deal in cryptocurrencies, they may facilitate payments for cryptocurrency exchanges?
So what they mean? So the circular maintains that the prohibition on banks and financial institutions from holding, trading, or transacting in virtual currencies. So this means that the banks cannot now wake up and say they are cryptocurrency custodians, or they now start facilitating cryptocurrency transactions. Neither can the other financial institutions. However, it appears to be that they have opened up this window to entities, they have opened it up for them to facilitate the transactions for regulated cryptocurrency exchanges. So remember that the circular sets out a guideline whereby for them to recognize who are virtual asset service providers. Those people need to have licenses, they need to follow specific guidelines and whatnot. So for a bank, there are now conditions. So it means the banks cannot engage on their own, but if you have organizations or entities who meet these conditions, who meet these criteria, you can then facilitate payment processing, account management, and other support services, provided that they comply with all the guidelines and all the anti-money laundering standards. So basically, they are opening up the financial system while protecting it from every Tom, Dick, and Harry. So essentially, what it means is anyone who follows our regulatory guidelines, the banks, you are free to provide financial services to them, in a nutshell.
Okay, Sheon, I'm just wondering, what more do we need to know about the just released guidelines for virtual assets and even virtual asset service providers, which include cryptocurrencies and also crypto assets organizations?
Pretty much, the guidelines is there are quite a lot of things, but first, obtaining a license from SEC, right? Depending on the kind of operations that you are in. Secondly, you must follow and comply by the anti-money and counter-terrorism laws. You must also be well registered. They've also set out some corporate governance laws. I think also even in the SEC guidelines, whereby the directors must be known people. The directors must be approved by the SEC. The directors must have some level of experience within the industry or the financial sector before they can, spring up and decide to operate cryptocurrency exchanges. There are also regulations about the transaction monitoring and reporting. So I believe that at the back end, there's also integration with the NFIU. If you remember, the actual guideline, the actual circular itself states that it recollects, the mention of, financial virtual assets by the Financial Action Task Force. So definitely there needs to be exchange of information between countries, between entities. So all these things are going to be invited into what the virtual asset providers need to integrate. So like generally there's what we call the travel rule, where you share information. So it's kind of like similar to what the EFCC has by the Special Control Unit Against Money Laundering, the SCOMO, whereby you have information on everybody who's doing transactions. You share the information with all relevant agencies. I mean, it's not a deterrent. Anybody who's doing business legitimately would always want to, share information for the sake of protecting the entire ecosystem and the country as a whole from money laundering and terrorist financing. On the other hand, too, what it is that it becomes legal entities, and it's providing some kind of safety net for the average user. So when you know that and you trust your government, right, that this particular entity has scaled all these marks. SEC also puts in some financial commitments in terms of capital, the capital that's required to start up these companies, and there's also a fidelity bond that needs to be dropped. So what that means is we will see, like it happened in the banking sector, there might be mergers of existing crypto exchanges for them to be able to meet up with all these criteria, and then it restricts the average Tom, Dick, and Harry from just waking up from their bed and saying, hey, you know what, I can run a cryptocurrency exchange, and then starts off, does a little bit of marketing. You get to market to users, people put in their funds, and then the exchange disappears. So all those things, there's, gradually, we are building a system whereby it will be protected. The government can say, okay, well, you have met all these criteria. We can say for a fact that since we have licensed you and you're under our regulation, there's some level of protection that can come with user deposits or funds that are held in custody. There's also a lot of things that they say about for those who are custodians. So there are different levels. So there are people who hold wallet services, who provide wallet services that can custody funds. There are talks about data. They talk about the architecture and the kind of facilities that they can run, how they can run them, how they can ensure that the cybersecurity policies that are in place. I mean, there are so many things. It just generally it speaks, better time and opening up Nigeria to the cryptocurrency space and of course to advanced technology development. So this is what it is that a lot of people who have lost hope in Nigeria will come back home, start building their products.
All right, I'm afraid that's the most we can
organizations.
take on the news. Thank you so much for your expertise, Sheon Dania, founder,
It's a
Trade
pleasure
Father.
to be here.
Thank you once again.